Hey traders and investors, it's Serge Berger here. One of the real pain points and a leading indicator from a risk asset perspective to the downside, and in what has now translated into a bear market for US equities, has been the high yield market. We're looking at the HYG ETF. One could also look at the J and K ETF. The HYG ETF has dropped about 20% since making a lower low last year. Interestingly enough, it is also right now sitting on a weekly chart more or less at a 61.8% Fibonacci retracement area of the entire move off the 2009 lows up into the 2013 highs. So ever since 2013, this high yield space has been making a series of lower highs and lower lows, and it now looks to be increasingly overdone on the downside. If we zoom in a little bit closer and look at the weekly chart, what that looks like so far, we are seeing a series of longer tails developing right down here. So we had a very long, basically bearish or bearish exhaustion, bulls basically getting washed out, taking place in January. And we're once again seeing it right now. In fact, last week's close resembled something very similar. So on a weekly closing basis, just like for the equity space, the high yield space has actually managed to hold above this past January's intra week lows. So that so far is a good. We now still need a buy confirmation week on a weekly basis to see a better confirmation. But so far, two long tails, which is a interesting development and potentially sets us up for a trade. If we now go in and look at all this on a daily chart, you'll see that here too we are starting to see some better price action. We basically had this break marginally below the January lows, and so far now saw a bullish reversal back up. If we look at this now with my 8 and 21 day simple moving averages, which are good moving averages that I like to use for the near term, you can see we've been trading below the 21 day moving average, which is this yellow line, ever since last November. That's a fairly meaningful low period of time to remain below there, and that as a result has also created a fairly tightening type of pattern that looks something like this. So if we can get the HYG ETF to break at least above its 8-day moving average, preferably above its 21-day, which is still a little bit higher, it's about at the high 77s, then I do think this will finally be ready to give us a more bullish move, I should say, that I would think should be able to get us at the very least back into the very low to maybe the mid 80s in the not too distant future. So I hope this makes sense, guys. A little trade setup that I'm looking at here in the high yield space, very much a counter trend bounce, of course, for the time being, but nonetheless a risk on, risk off environment requires us to be able to look in both sides of the market. Please like this video. That's how I move up in the YouTube channel, in the YouTube world. Subscribe to my channel, and I'll see you in the next video.